Before we start the main part of the course, we're going to go through here the DEAD CLIC mnemonic or memory aid. It's super important, that's why we put it at the start of the course. As we said here, these are possibly the two most important words that you're going to learn for the purposes of the accounting examination. So DEAD CLIC tells us what entry to use to increase each account type. So for example, we must use a debit or an entry on the left hand side of a T account. The D and the debit there go together obviously. So a debit is used to increase an E or expense account, an A or asset account, or to deal with drawings or dividends. Works quite well, they've both got D's corresponding to the final D there. So try and think in your head, right, I've got an expense account and I know I need to increase or add something into that account. Think back to DEAD, right, that means I use a debit entry for that purpose. Then we have the word CLIC, so it's the other side, credit, the right hand side of the T account, C and credit there. That's what we use, again, always for an increase, to increase an L or liability account, to record income or revenue, think of income probably because it matches up with the I, or to increase capital, the final C there. That could be equity share capital, share premium, retained earnings. So we use credit entries for that purpose, for the LIC in the CLIC. So in everyday language, generally people will think debits, that doesn't sound good, credits, that sounds good, but we need to completely forget about that for the purposes of the accounting exam and for double entry bookkeeping. It's not saying something is good or bad. For example, having an asset is a good thing to have. We don't really want liabilities, but that's called a credit. So that kind of way of thinking of debits equals bad, credits equals good, just forget about it. It doesn't apply to the double entry bookkeeping system. It's just a way of recording things. It's not trying to say whether something is good or bad in itself. So forget about that way of thinking and instead use the DEAD CLIC approach. Very important note to finish though, as we said really already, this is a mnemonic for how we increase each account type. So DEAD CLIC tells us the entry needed to increase or add into the relevant account. So if you need to work out how to decrease the account, you must use the opposite entry. Okay, so for example, if we've disposed of an asset and that's left the business, then we don't have a debit entry into the asset category because debits from DEAD are an increase entry. So we have to use a credit to the asset account to take that asset out if we dispose of it. That's again different to everyday language where we don't really credit something when we take it away, do we? So again, forget about everyday language. Okay, so you can think of this as, this is how we increase things. So then a debit will decrease all the letters associated with CLIC because that's on the other side. So if we need to decrease a liability or income or revenue or capital, then we can use a debit entry to decrease it because CLIC tells us we use a credit entry to increase those, but we're going the other way when we're trying to decrease the account. So first, just learn it. DEAD CLIC, this is how we increase. We use debits for these things, we use credits for these things. Get that clear in your head first, very clear, and then you just reverse things when you're trying to decrease each account type. So once again, the debit will decrease all the letters associated with CLIC, and a credit therefore will decrease all the letters associated with DEAD. So that would be expenses, assets, we gave the example already, drawings or dividends. A credit into that kind of T account will bring that account down and decrease it. So super important approach, and we'll refer back to this a lot in the course. Make sure you go back through this slide really and understand everything we've talked about before you go any further.